Let me give you one more example of the positive way to get raving fans. This is a story about Tony the trash guy, and this is actually a true story. About 10 years ago or so, we decided we were going to finally finish our basement. We'd lived there for 10 years already, and all the basement had done was this sort of giant garbage can, just collected stuff. And so to finish it, we had to empty it, which was like this awful, awful project. So I started carting stuff upstairs and filling up the garage with stuff that we were going to get rid of. So now what am I going to do with it? I can't put it out at the curb. There's too much stuff. So I go in the phone book and I start looking for trash people. I didn't really know what they were called even at the time. And I called a whole bunch. Most of them I got voicemail. Most of them, you know, never called back. Well, there was Tony. I called Tony, and Tony called me back right away from his cell phone. He was somewhere. And he said, okay, I'll be there at 4 o'clock. Tony showed up at 4 o'clock. We're doing good so far. And he said, okay, this looks like about this much stuff. It'll cost this much to take it away. There was still some stuff in the basement, some heavy things. He said, I'll take care of that too. So Tony filled up his truck, or hadn't taken it away at the time, but did everything that he said he was going to do. So now I'm a satisfied customer. Well, how did I become a raving fan of Tony's? Well, this won't come out right, but it's, he actually cleaned out the garage. I mean, he didn't take the stuff he wasn't supposed to take, but I mean, he cleaned the garage. And it was spotless. It was cleaner than when he showed up, or cleaner than when I started piling stuff in it. Well, it gets even better. 3 days later, I get a thank you note in the mail from Tony, the trash guy, which was amazing. And I have probably sent 40 people to him in the 10 years since. I mean, and you think about the effort that it took him. Wasn't that much, but he did what he said he was going to do. He went above and beyond. It was an amazing experience, actually, to watch this guy do that. And it certainly has paid off for him. Well, why do customers leave? There are 4 reasons, and I don't have this slide built right, but I'll get to the last 2 in a minute. The first one, reason customers leave, is they go away. And most of what I'm going to talk about today are business-to-business situations. Some of them are, you know, obviously Colonel Sanders is a consumer business, but most of the examples will be business-to-business. That's where my career has been. But some of them move away. And I should also say we'll be able to, at the end, we'll give you the opportunity to get copies of the PowerPoint so you don't have to write everything down. Also, I should say I would encourage everybody to ask questions as we go. This is not very formal, so feel free to ask a question at any point. 9% of customers are lost to competitors. That's a much smaller number than most people would expect. So what are the 2 main reasons that, what do you think is the next of the 2 main reasons? This will force a little interaction here. Anybody want to take a guess?
Satisfaction or service?
That's actually right, although it's listed here under product dissatisfaction. Very good. Class participation is excellent. I used to teach, or I have. But it's only 14%. What do you think is, and this adds to 100, so what do you think is the remaining percentage in terms?
They're not treated right.
Pardon me?
They're not treated right.
That's essentially right. It's actually even a little different than that. It's indifference, actually. 68% of customers leave because of indifference on the part of the company. And that's, and we're going to talk a lot about dealing with the indifference and the attitude issue for the whole rest of today. Okay, I said I was going to talk about it, and there's a lot of numbers here, so bear with me, and again, they'll be available in the PowerPoint. What is the value of a satisfied customer? And there are a bunch of studies, and we're going to just touch on some of those and try not to be too boring about all of this, but it really is interesting. The first one is a study that was done probably 30 years ago. It was published in the Harvard Business Review. And they took public companies, so they looked at their annual reports and tried to figure out whether a company's primary mission was focused on the customer or focused on the shareholders. And for those of you who've been through business school, you know that you learn all about the purpose of an enterprise is to increase shareholder value, all of that kind of stuff. So it took them a lot of work because everybody's annual report says they are interested in the customer, of course. So they had to really pay attention and focus on discerning which companies truly had a mission that was focused on the customer versus companies that truly had a mission that was focused on the shareholders. Neither one is not wrong. And then they studied the total return to shareholders, the stock price, and dividends, everything that goes into total return to shareholders over time, to figure out which cluster of companies had the highest total return to shareholders. And guess which one it was? It's a loaded question, so. Right, it's the customer-focused companies are the ones who had the highest return to shareholders. The next two were done by the same people who did a number of studies on customer satisfaction. They found a very high correlation between customer satisfaction and return on investment, again supporting that same result. The next one is counterintuitive, but it is interesting, so I put it in there, and that is they also found that customer satisfaction decreases with market share. So why do you think that is? It's because as companies grow fast, they tend to pay less attention to their customers. So if you're successful in growing in a difficult environment, don't lose focus on the customers, because that is a result. So if you have a prospect, what's the probability of sale? It's 60 to 70% probability to sell to an existing customer, and it's only 5 to 20% probability of closing that sale with a new customer. The next two are kind of interesting too. A 10% increase in customer retention. So let's say you're an enterprise software company where I spent most of my career. The sort of target for an enterprise software company is 90% retention because enterprise software companies collect maintenance every year on their software. So if you increase that by 10%, that's not from 90 to 100, that's from 90 to 91. That actually results in a 30% increase in the value of the firm, and that was a study that was done by Bain, the Boston-based consulting firm. Gartner, another East Coast consulting firm, 5% increase in retention can increase profits anywhere from 25 to 125%. So keeping your customers results in incredible value in the firm. Some sort of sales metrics, Pareto principle applies, 80% of your sales come from 20% of your customers. You've all heard this one, although it's usually listed as 10 times, but I think the actual studies show it's 5 times. Costs 5 times more to get a sale from a new customer than it does from an existing customer. A 2% increase in retention is the equivalent of cutting costs by 10%. So companies that are trying to make it in a recession by reducing costs would be well served by increasing customer retention. Average customer loss per year across all B2B customers is 10%. The last one is interesting, and you've heard this too. Happy customers will tell 4 to 5 others. Unhappy customers will tell on average 9 to 12 others. So Tony the trash guy, I'm one of his, I told way more than 4 to 5, but if he'd done a really bad job, I probably would have told a lot more than I did. And the longer the customer relationship, obviously the customer profitability goes up. So does it make sense that keeping your customers happy is a good idea? Say yes.